Hello, everybody. Welcome. As I like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, here we are. It's Monday today, obviously, and it's been a bit of a wild ride over the last few days. You can see it's kind of been going down mostly, but realistically, it's kind of gone nowhere. And if we kind of go back to where we are today, you can see we're basically back to about 2.5 weeks ago. Let's say 2 weeks ago. So we're exactly where we were almost 2 weeks ago. So nothing's changed. Volatility is ticking up, and that's obviously because the market is ticking down, but nothing crazy yet. We don't know what's going to happen next. This is the S&P 500. This is where we always start at SPY. If I look at the NASDAQ, similar story. Probably a little higher overall, still pretty much near its highs. But again, volatility ticking up a bit as the market ticks down a bit, but nothing crazy yet. Again, we're basically where we were 2 weeks ago exactly. And the Russell looks pretty much the same, except this one is still cruising along at highs. So this one has had a couple of down days, but then it's had a couple up days, and it's at all-time highs. So what are we going to trade this time? We're actually going to go and take a look at gold because it's been taking a beating lately. As you can see here, if we just do like the overall look of it, basically for the last 3 months, it's been on this kind of downward trend. Now, gold in particular, commodities generally, volatility is not usually too high. What's weird is with commodities, a lot of the time, if you look right here, volatility spiked, and that's when the price went way up. So commodities generally move opposite with volatility than stocks. Usually when the price shoots up, volatility goes up, which is the opposite of kind of a normal stock. And usually when it comes down, it doesn't do a whole lot, but it may spike again. You can see here it did spike on this huge drop over here. But in general, this is kind of how commodities usually work. It's usually a spike when the price spikes up, not down. But just like anything else, if people get scared, then volatility will spike like anywhere else. Here, you can see it's been on this downward trend for a long time, and really volatility has pretty much gone nowhere, right? Except for this small little blip right here. Essentially, it's been going down the whole time, and volatility is staying pretty much kind of where it was. But volatility is still decent. At 36, it's not bad. So, what are we going to do here? I'm going to do a contrarian play, which is I'm going to make a small bet that the stock may come down for a little while, but in the short term, it's going to hopefully bounce back at least a little bit. And that's all my trade is hoping that'll happen. In the next 30-ish days, I'm hoping that gold basically bounces around and hopes to shoot back up even slightly over the next 30 days. This is going to be a short-term trade. I'm not looking for the 45 or 60. I'm basically playing for a bounce. So I'm shortening the expiration cycle, basically playing for this to move in the next 30 days up at least a little bit to take some profits. I don't care about this long term, what's going to happen here. And how do we do that? Well, if you go to the trade page, I'm going to go, like I said, right here to 32 days, which tomorrow will be 31, still in our wheelhouse, 30 to 60. But again, this is a much more short-term play, so I'm looking for the shorter expiration cycle. If I open it up, as a general rule, what am I looking to do when I sell verticals? I want to sell a dollar vertical for 33 to 40 cents per dollar width of strikes. So if I sell a put vertical here, and I'm starting right below the stock price here. So the stock price is almost at 385. It is 384.59. So 384 is the first put below the stock price. So if I sell the vertical right below it, when I pull this up, you can see, okay, this says 47 cents. What does that mean to me? That means this vertical is too close. The reason I have this 33 to 40 cent width is because that gives me a higher probability of profit on my trade. The further I move away from the stock price, the better my chance of winning on a trade. And the perfect window for that is 33 to 40 cents. That gives us around a 70% chance, roughly, of making money on this trade. So, how do I correct this problem? All I do is I go further away. Right now I'm selling right below. So let's go two below. Let's say I sold the $382 vertical. That's 40 cents. So that fits in our wheelhouse. You can see I've gone $2 below where I was a second ago, and that makes my probability go up because I'm way below the stock price now. Can I go even further? Let's say I go to 381 and sell a vertical. 35 cents still fits in our wheelhouse. 33 to 40 cents per dollar width. This is 35. Obviously, if I go the next one down, it's going to be too much. So in this case, I can choose either one of these verticals. I'm going to choose one with the higher probability of profit by going a little bit further away, collecting a little bit less, and making this trade, which I'm hoping for a bounce in the next roughly 30 days. So all I'm hoping is that the stock, it can go down a little bit from here, but as long as it stays above 381 for the next 30 days, or it bounces up high, I might take profit sooner, this will be a profitable trade. And that is how we play the game with commodities, and that's how we work verticals and make sure we're doing it correctly. All you have to do is make sure it fits the rules here. If you're collecting the right amount of credit for a trade, you have set up the trade correctly. So the rules help you trade correctly. That's why they are here. So that is our trade in GLD, which is the gold ETF for tomorrow. Oh, and FYI, I will be gone this weekend, so we won't see another one of these for about 2 weeks. I'll see you in about beginning of July will be the next one. See you all then. Hey everyone. I'm a big believer in the old Chinese proverb of give a man a fish, you feed him for a day, teach a man to fish, you feed him for a lifetime. And what does that mean in this instance? It means I'm not looking to give you a trade or two. I'm looking to teach you to trade so you can do this on your own and generate your own income for a lifetime. The way I look at it is this is where you all are, and this is where you want to be. And in between is a huge gap of expense, experience, time, etc. But what I'm looking to do is shorten that by building you this bridge. And how do we do that? For anyone who wants clean, simple, reliable guidance, I created the Essential Income System. You get the benefit of a structured, research-backed, experienced trader like myself, and all you need to do is follow along. And no, these aren't make-believe trades. These are fully formed trades that I'm actually doing myself in real time and sending to you in real time that are ready to execute. You don't have to guess, you don't have to stress, you just plug right into a system that works. Now, the important thing about this is, number one, you don't need any prior trading experience to use this because the alerts will give you all the information you need for the trade. I also limit it to 2 to 3 trades per week. I don't want to overwhelm you with trades. That doesn't help. 2 to 3 trades mean you can pick and choose or do them all. They're all designed to be small as possible, meaning like risking a few bucks here, a few bucks there, not big wins, big losses. We want to get you up and trading comfortably. They are going to be sent out in the first hour generally of the market opening. I'm going to give you the complete setup, and I'm also going to show you how to manage these. As they close, you'll get the alerts as well to let you know that they have closed. And all this can realistically be done in less than 15 minutes a day. The point of this is a mindset shift to remove the fear and go from just learning to actually doing. 6 months from now, just imagine getting the same results that I do. And for those interested in not just copying trades, but actually gaining the confidence to create, make, and manage your own trades, I've created the Pro Trader Academy. It's not just alerts and it's not just courses. It's a complete trading system designed to take you from beginner to intermediate to advanced to consistent. What you need is a structured system, not scattered information. The Pro Trader Academy includes the Essential Income System, but it also includes every course I've ever made, along with every course I will make in the future, plus webinars, plus potential office hours, etc. This is valued at over $2,000. It includes all my beginner courses, which will take you from ground zero to trading defined risk trades. It then steps up to intermediate courses, which adds a few more strategies. And finally, it gets to advanced courses, which is where the pros live. These are the high risk, high reward, high probability trades of naked options. It also includes my 1-day crash course, which is a 6-hour crash course designed to take you from absolutely ground zero to trading by the end of the day. Now, normally the Essential Income System is $49 a month, and the Pro Trader Academy is $99 a month. But good news, because you showed up here today, you're in luck. You can get the Essential Income System for only $1 for the first month, or you can get the Pro Trader Academy for only $19 for the first month by going to sharpertrades.com and using either one of these coupons. And here's the great news. There's absolutely no risk to you as both of these are month to month and can be canceled at any time. So, again, go to Sharper Trades or use the attached links. Again, there's no risk. You can cancel anytime. Give them a try. Make sure they are for you. And I look forward to having you join me on your journey to financial freedom. Hope to see you there.